1. Question 1 points category. Economy. A bank loan becomes non-performing when 1. Interest and / or installment of principal remain overdue for a period of more than 90 days in respect of a term loan. 2. Installment of principal or interest thereon remains overdue for 2 crop seasons in case of a loan granted for short duration crops. Which of the statements given above is / are correct? 1 only, 2 only, both 1 and 2. Neither 1 nor 2 correct. See statement 1 is correct. According to RBI, bank loan becomes non-performing when interest and / or installment of principal remain overdue for a period of more than 90 days in respect of a term loan. Statement 2 is correct. In case of an agricultural loan, a loan granted for short duration crops will be treated as NPA if the installment of principal or interest thereon remains overdue for 2 crop seasons. 2. Question 1 points category. Economy. With reference to non-banking financial company NBFC, consider the following statements. NBFCs can involve in business activities like the sale / purchase / construction of a movable property. Deposit insurance facility of Deposit Insurance and Credit Guarantee Corporation is not available to depositors of NBFCs, unlike in case of banks. NBFCs also lend and make investments, and hence their activities are akin to that of banks. Non-banking financial company NBFC, consider the following statements. NBFCs can involve in business activities like the sale / purchase / construction of a movable property. Deposit insurance facility of Deposit Insurance and Credit Guarantee Corporation is not available to depositors of NBFCs, unlike in case of banks. NBFCs also lend and make investments, and hence their activities are akin to that of banks. Which of the statements given above is / are correct? 2 and 3 only, 1 and 2 only, 1 only, 1, 2 and 3 correct. The statement 1 is incorrect. A non-banking financial company NBFC is a company registered under the Companies Act 1956, engaged in the business of loans and advances, acquisition of shares / stocks / bonds / debentures / securities issued by government or local authority, or other marketable securities of a like nature, leasing, hire purchase, insurance business, chip business, but does not include any institution whose principal business is that of agriculture activity, industrial activity, purchase or sale of any goods other than securities, or providing any services, and sale / purchase / construction of a movable property. Statements 2 and 3 are correct. NBFCs lend and make investments, and hence their activities are akin to that of banks. However, there are a few differences as given below. NBFC cannot accept demand deposits. NBFCs do not form part of the payment and settlement system and cannot issue checks drawn on itself. Deposit insurance facility of Deposit Insurance and Credit Guarantee Corporation is not available to depositors of NBFCs, unlike in case of banks. 3. Question 1 points category. Economy. The term sterilization by RBI implies the process of recovery of bad loans, liberalizing of loan conditions, giving new banking licenses, open market sale of government securities. Correct. D. The term sterilization by RBI refers to the process by which the RBI takes away money from the banking system to neutralize the fresh money that enters the system. RBI often uses its instruments of money creation for stabilizing the stock of money in the economy from external shocks. Suppose the RBI decides to buy US dollars USD from the market. Now, the money held by the RBI does not form part of the banking system. So, If the RBI releases rupees from its coffers to buy dollars, the money supply in the banking system increases. That can be a problem. More money in the banking system means higher bond prices. Because banks will have more money, they will buy more bonds. And that will push up bond prices. Since bonds carry an inverse price-yield relationship, higher bond prices means lower yields. The problem is that lower yields will force the RBI to cut interest rates further. If the RBI does not want to cut rates, it will reduce sterilized liquidity that causes the yields to fall. It will do so by selling the government bonds that it holds in its books. This means that sterilization is possible only to the extent that the RBI holds government bonds in its portfolio. This process of selling government bonds to reduce liquidity is part of its open market operations.